Hello, and welcome to TADA Talks, sponsored today by CADA 360 Garage Insurance Program delivered by Hub. I'm Todd Bourgon, the Executive Director of the Trillium Automobile Dealers Association, and I'm here with me today is Martin Lee, VP of Dealerships and Leasing for Hub Insurance. Today we're going to be discussing risk mitigation on the garage insurance side. Martin, thanks for joining me.
Thanks, Todd. My pleasure to be here.
So Martin, let's start off with talk to me a little bit about the relationship between Hub and the CADA.
Hub and CADA have had a long-standing relationship. Hub's been the broker for the CADA program for over 11 years. Our Vice Chairman, John Chippendale, has also had a 28-year relationship with CADA.
Oh, excellent. Okay. So before diving into risk mitigation, can you give us a little bit of an overview of what the insurance market is looking like for our Ontario dealers when it comes to garage insurance?
Absolutely. I thought maybe I'd start with a little bit of an overview from the sort of global insurance marketplace and how that looks.
Okay.
We are currently right now going through what we would call a hard market. All lines of business have been struggling with profitability. Property results and specifically have been extremely challenging for insurers over the past few years. As a result, obviously, we've seen substantial rate increases along with diminished capacity and appetite for new business in the insurance marketplace. That's sort of the general marketplace. In terms of dealerships, I think historically, it's been a very challenging class of business for insurers. Insurers have been challenged with profitability, and the past few years have been no different, resulting in some insurer changes on various programs over the years. What's interesting is about 10 years ago, we completed a risk management analysis of the CADA 360 program, breaking down various losses into specific categories, and we broke them out into vehicle inventory, on-road, meaning demos, courtesy cars, and so forth, and then property, liability, and premises. The analysis concluded that from a frequency perspective, 6% of all the claims under our program come from vehicle inventory losses, 72% come from actually on-road exposures, meaning the demos and the courtesy cars, and 22% from property claims. And we update this information annually over the past 10 years. And what's interesting is that percentage barely changes. It might fluctuate 1 or 2%. So from an insurance perspective, the on-road exposure related to collisions, bodily injury, and accident benefit claims continue to make up the majority of losses from a frequency basis. And then weather-related losses and obviously fires, specifically dealership fires, make up the majority of the losses from a severity perspective. At the end of the day, insurers have been looking for higher than normal rate increases on the dealer programs over the past couple of years. And that trend is expected to continue probably for the next year or two.
So if I'm a dealer, one of the things that I might ask you is, right now I have less inventory because of the fact that factories were shut down for a couple of months, COVID related. I'm seeing less footsteps in my dealerships because our model has had the change, a lot of by appointment only. So the data that you speak of, is it current data? Is it historical data you look at? Like, what would you say to a dealer owner that would say, I have less in terms of the things that I've just mentioned, but my rates continue to either go up or staying static? Can you just comment on that?
Yeah, absolutely. I completely understand where the dealers are coming from. Obviously, it's been a challenging year for them. Unfortunately, as I'd mentioned before, dealer programs have struggled for profitability. And this is based on, historical losses, historical results, and current results as well. And the current trend, those programs are still struggling. We know insurers are still looking for rate increases, even though, for example, I know there's been a lot of communication, in the media about, personal lines insurers sort of giving a little bit back to, to consumers. Personal lines and program, like a dealer program business, is very different, obviously. Okay. The unprofitability of dealer programs over the last 20 years makes it very difficult for insurers to offer discounts. But even though we've seen less collisions, what's interesting is we're seeing a rise in other types of losses. So for example, thefts, fraud-related losses are on the rise. And unfortunately, over the past few years, we've seen an increase in frequency of large losses like, dealership fires and so forth.
Okay, so maybe what we should do is later on in the podcast, we'll get into those areas a little bit more specifically. Let's talk a little bit about seasonality. So it's winter right now, obviously. Yesterday, I think, or Monday was the first day of winter. So are there any precautionary measures that you can advise dealers to make when it comes to mitigating risk for the insurance, and also that would affect their rates or not affect their rates?
Absolutely. With regards to winter preparation, one of the biggest recommendations that we have is, and it's not just for winter preparation, insurance in general, if you can transfer your risk as much as possible, that's always an advantage to dealers. So for example, snow removal, in terms of obtaining a snow removal contractor, that would be a recommendation that we would make. Ensure that the contract clearly outlines the snow removal contractor's responsibilities and then the dealer's responsibilities as well. In terms of, clearing snow right up to the, front door, or is the dealer responsible for, the 2 feet from the building? These details are very important, very crucial in the event of a slip and fall loss. Obtain a copy of the contractor's insurance certificates annually to ensure he has proper coverage and that you're also listed as an additional insured onto that policy. Ensure there's indemnity agreements if the contractor fails to meet their contractual obligations, ensuring that their policies will respond to a loss and defend a dealer. In terms of, say, in-house snow removal, because most dealers probably do that. What's key there is documenting the snow removal activity by maintaining a snow removal log. So for example, having the date, time, and the activity performed, and the staff who completes those tasks or services. So whether it's salting, shoveling the snow, the date, the time. The snow removal logs will help insurers defend dealers in the event there is a slip and fall incident. That log will validate that the dealer has implemented and has maintained effective risk management processes related to snow removal, and it will, hopefully help mitigate the slip and fall incident. A couple of the other things that that are pretty standard in terms of maintenance would be using slip mats during winter season. Making sure the corners aren't curled up. That seems to be a common thing. Make sure we tape them down. Make sure there's a standard, create and implement a standard incident reporting procedure. Maintain walking surfaces to make sure they're in good overall repair, especially in the parking lots. No potholes or cracks that can lead to falls and slips. Obviously making sure there's adequate lighting. Complete regular on-site maintenance as scheduled. Keep stairs and steps, landings and guardrails secure and in good condition. Obtaining insurance certificates, like I mentioned, for all providers. Making sure drains and floor drains are clear of debris, so that when the sun comes out and starts melting snow or ice, that there's nothing obstructing that pathway. And then maintaining safety equipment, right? Make sure there's cones and signage in case there is water puddling, whether it's in the showroom or outside the dealership. Those are sort of the standard recommendations that we would make for dealers.
Yeah, and it's interesting. Some of them seem so simple, but with all the other things going on, when I speak to dealers today, some of them are telling me, like, man, we are sanitizing the dealerships to death. We're sanitizing seats. We're sanitizing this. It's sometimes it's easy to lose focus of some of the little basic things that need to be taken care of. So this is a good reminder. Let me just ask you this one in terms of the snow log, because I know a lot of dealers that do their own snow removal. Mm-hmm. And would you recommend that they would have a dash cam for something like this, rather than keeping a paper log, or would that satisfy an insurer if there was ever a claim that was challenged?
The idea of the snow log is to validate that dealers are actually performing the services that protect their business and keep the public safe. Okay. The challenge with slip and falls is, and I've, many of my dealer clients, we've had these type of situations. A lot of times dealers don't even know there's been a slip and fall incident. So all of a sudden, the statute of limitation to file a lawsuit is 2 years in Ontario. So, a day before the 2-year period, they could get a statement of claim that says, hey, I had a slip and fall incident on your premises, I'm suing, we'll see you in court. And unless there's a snow removal log that documents the activities, it's very challenging for a dealer to, remember the day it happened. Was there snow? What did they do? And part of the advantage there when we speak to the insurer is that snow removal log just provides credibility if they have to go to a mediation or go to court to show that the dealer has a process. They're implementing the process, it's documented, because at the end of the day, if it's some phantom lawsuit, if there actually was no snowstorm during that period where they've claimed, that there was an incident, that could potentially make that claim go away. So it's just really validating that they're doing their due diligence to protect their the public and their customers as well.
Okay, I think that's sound advice. Again, someone like myself that wouldn't know any different, I would have thought that the dash cam would have been actually better. But when you articulate it back, when you look at from a legal perspective and from a defending perspective, it makes total sense. So thanks for that. I don't know any dealers that don't take mitigation very seriously, but if there were any that kind of take the approach of, well, I have insurance and that's what it's there for. Would you have a message to anyone that would kind of think that way or have that sort of mindset?
I think it's very, very extremely important to have an effective risk management program. There's a variety of reasons. One, it saves resources, right? Time, assets, income, property, staff. Protecting your reputation and public image. It protects people from harm. Having an effective risk management program. It prepares you for the unexpected. It can help reduce, obviously the key one is it helps reduce your losses. The key thing I think for me is an effective risk management program can help you save money by stabilizing your insurance rates. Because at the end of the day, if having an effective risk management program keeps your losses down, some of the key drivers that generate increased premiums. Obviously exposure increase will increase your premium. So if your inventory goes up, a couple $1 million, you acquire a new operation, a new building, those things, inadvertently increase your premiums. But the key number and the key item that insurers look at is your loss ratio over 3 years. They factor in the claims you've had, what they've paid out in terms of claims, regardless if losses are, for example, like collision losses, whether they're at fault or not at fault. For commercial business, for insurers, it really doesn't matter. For them, it's strictly dollars in, dollars out. So if a dealer's paying $100,000 in premium annually, but they're paying $150,000 in claims annually, that math just doesn't work for the insurer, and it's going to result in increased premium. So mitigating the losses and having, every dealer's going to have a loss at some point. But sometimes it's bad luck. But there are a lot of losses that, that we believe and insurers also believe that are controllable, right? So controlling that with an effective risk management strategy will, in the end, I think, help dealers save money long term. Another thing is we've created at Hub also a loss control reference guide that provides specific tools and recommendations for dealers to help reduce hazards and exposures in the dealership, eliminate potential losses and reduce the risk of injuries. This is available to obviously all our clients, because in our opinion, trading dollars with an insurance company, we don't think it's a battle that can be won. That effective risk management strategy with the goal of mitigating losses will result in better renewal terms, we believe, long term.
Excellent. So this is something near and dear to my heart. This past year, we've seen a definite shift in online buying as a result of COVID. So a number of different things have come into to factor with online buying, some related to insurance, some not related to insurance, some related to finance, but let's obviously focus today on which ones are related to insurance. So are there things that the dealer can do to protect themselves when it comes to the online purchase?
Yeah, that's actually a very interesting point, Todd, because we have seen an increase in fraud-related losses over the past few years within the dealership. Some of them obviously are in-person sales and more so obviously on the online sales piece. Identity thieves have become much more sophisticated in how they steal vehicles, whether it's online or in person. And that exposure exists for both type of sales. Thieves and fraudulent individuals are able to provide, false identifications such as driver's licenses, and these are sort of one of the common things that we see when we have a fraud loss, whether it's online or whether it's in person as well. So we believe that there are some processes that can help dealers reduce their risk or mitigate the potential of being victims of those type of losses, whether it's online or even in person. So for example, requesting 4 pieces of identification we think is key. Obviously a copy of a driver's license. We believe asking for a copy of a passport, obviously a credit card, and the 4th thing, it sounds maybe pretty funny, but a copy of a utility bill. Asking for those 4 pieces of information, if a thief can go through, or a fraudulent individual can go through the trouble of obtaining all 4 of those, I think it's unlikely that they're going to have all 4 of those, and it's just an added step to validate that the individual is actually who they actually say they are. Another key thing is not releasing a vehicle until payment has been secured, by the dealer. That can be a little bit challenging, obviously, with the way banks operate. Sometimes they don't fund deals for, 2 days. Sometimes it's a week. Sometimes it's 2 weeks. And if it's an online purchase, for example, is ensuring that that you've received funds before you release a vehicle. Purchasing is a little bit different. So for online purchases, we always say, ensure that you complete your due diligence, verify ownerships. Obviously, Carfax is a pretty standard process these days, and verify that the vehicle is free and clear of any liens if you're purchasing one. Try not to purchase vehicles from unknown entities, right? If you see something online, no other dealer or colleague has dealt with this individual, I think can be seen as high risk transaction. And then obtaining pictures of the vehicle, VIN numbers, and cross-referencing that registration of the vehicle to ensure that, does it actually exist? Is it actually there? It's not bad either, if you're going to get it chipped, having the transport company actually show up and validate that is a vehicle before you actually release funds.
Okay, Martin, I'm going to stop you there. There's a lot more to cover, and we'll address that in part 2 of TADA Talks with Martin Lee from Hub International, including cyber threats, how to protect your dealership's data, how to reduce risk from fire, and CADA's 360 garage insurance programs. Thanks for joining us today, and thank you to CADA 360 for sponsoring today's podcast. This is Todd Bourgon signing off for this edition of TADA Talks.